Welcome to the Techno Fundamental Report for January 26. This is Bernie Madoff, but focus on this fella here. This is Frank D. He was the brains behind this Ponzi scheme. Now realize this Ponzi scheme went on for 30 years and grew to the size of $60 billion, of which only a small fraction of that amount was true money, because what D. Pascale developed back 30 years before was a statement where he would fabricate a monthly statement every month. It must have taken a tremendous amount of work. I mean, to think about all the trouble these guys had to go to fabricate transactions so that every month when you received your statement from the Bernie Madoff organization, it would always show either a 1% increase every month or 0% increase or even a 2% increase. He would do, 9 to 12% a year, so it wasn't really a dramatically big number. But because of the consistency, you never had a down month. In other words, if the market went down, you didn't go down. If the market went up, you went up. So basically, it was just a major fraud, and I just wanted to bring that to your attention. I want to also talk a little bit about the economy right now. We mentioned in the past that we were going to get rid of the yield curve as one of our indicators, and just so happens that the economist Campbell Harvey, who invented the inverted yield curve indicator, has now saying that he thinks it's malfunctioning, that it's giving a false signal. If you look at the employment level that we're at right now, I mean, that doesn't look like a recession to me. I mean, I'm showing you here 2008. This is unemployment or employment just falling off a cliff, Now, real personal income, this is as of now, it's in a very positive uptrend. So all this talk about recession and the yield curve and so forth, it could be giving a false signal. Now, also, I wanted to mention this article that was written in 1979. This was The Death of Equities, was the cover article for Business Week. This is approximately where that article came out. So what I'm saying is, in 1979, they were saying the death of equities, and from 79 to 82, it was a difficult period. But look what you would have missed if you would have listened to this article. And the main thing that I studied back in the 70s was, what could I have done that would have made a difference? Well, I had to find this company Walmart. Look at Walmart and what it did over that time period. Anyway, I'm adding a new indicator this week. I'm adding the number of new highs on the S&P. Now, as of yesterday, we had 9 new highs. We want to see 60 or more. So we had mentioned how the new lows, which we can look at here in a minute, the new lows are important for helping you to understand where the selling is driving up. But I don't really think we're going to have a definite sustainable bottom until we see the new highs start to perk up a little bit. We'll just have to keep an eye on it. Stocks above the 200-day moving average on the New York Stock Exchange, you can see really improving here. I mean, look at where we were. We were down to, 12.5% of the stocks on the New York Stock Exchange were above their 200-week. Now it's over 63%. So much improvement there. We're seeing improvement. We're breaking the 200-day on the S&P. Now, we haven't broken the 200-day on the NASDAQ, but we're definitely seeing improvement here in the market. Now, what would be nice would be as if we could kind of get an uptrend going here. So you can see here we made a low, we made a higher low, now we're making a higher high. So it does look like the S&P is going into an uptrend. Volatility continues to be in a downtrend. This is the VIX. Now I'm using here a 50-day moving average, and I've removed the VIX, but the VIX is below 20 now, which is saying that volatility is really starting to dry up. Aggression index, we're actually starting to see the potential buy signal here on the aggression index, where we're comparing technology to consumer staples. Now down here we're just comparing the NASDAQ to the S&P 500. And you can kind of see some improvement there as well. Now, what would be good here is if we could get up in here, hold in here, and this particular line turn up like it did back here. Looking much better. On our 3 economic indicators, interest rates are still hanging around that 3.4, 3.5%, close to breaking that 200-day moving average to the downside. Here's oil. Oil continues in a downtrend, still hanging around the $80 level, and then the financial stocks are improving. In fact, look like they're starting to go into an uptrend as well. Now the new lows on the New York Stock Exchange, now we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days below 40 new lows. So that's just kind of telling us that maybe the sellers are starting to dry up here. Here are the new lows on the NASDAQ. You can kind of see a similar story there. Now on sentiment, one thing to mention on sentiment was last week we got to a -2. We were a -40. So in other words, remember when it's below zero, that means more bears than bulls. So we're really getting close to this popping back above zero for the first time in a good while. Here is the Vanguard World Fund. This is just showing international stocks. You can see that the international markets are really starting to pick up some steam here. This is the consumer staples. Wanted to mention this. You can kind of see where they're breaking down. I hate to see anything go down, but the defensive stocks are starting to break down. Here are the utilities. You can see where the utilities are starting to break down. So to me, that's good news because that means that maybe the money is starting to move more towards growth stocks. Now, the stock I wanted to mention today is Axon Enterprises. This is the company that invented the taser, which is used by the police force. You can see here a really nice kind of a cup handle formation here. You got a pullback, then you've got an uptrend going here. Stock looks good on a technical basis. On a fundamental basis, profit margin is right around 10%, which is fine. However, they have negative cash flow after paying off all debt, and they do have debt. They've got $23 million in debt, but they also have $377 million in cash. So they're in pretty good shape as far as everything goes. The current ratio is almost 3-to-1. That's good. Revenues were up 34%. However, earnings were down. They're spending a lot of money developing a technology for the police using the cameras and so forth. Now, this is the guy I wanted to mention, the founder of the company. His name is Rick Smith. He founded this company in his Tucson garage in 1993 after two friends were shot and killed. Originally known as the Taser International, Axon's mission is to protect life, which includes making bullets obsolete. Well, that's kind of interesting. If you remember, Star Trek show, they had the taser, where you could turn it on stun. But anyway, he's got an interesting background. I've learned over the years that the best CEOs are usually engineers or scientific type people that have that kind of brain because they invent things. He's graduated cum laude in neuroscience from Harvard University. He went on and got an international finance degree. He also in Belgium, and then he got an MBA from University of Chicago. Basically, you don't want MBAs running the company, but you do want the engineering types running your company. So if you have any questions, please let me know. Thank you very much.